What if I told you that investing is older than banks, older than stock markets, and even older than money as we know it? Today, we're diving into how investing began, what tools people use today, and where the future of investing is heading. So if you want to build wealth in a modern world, understanding the history might just give you the advantage you've been missing. Let's get started. Let's rewind the clock. Way back before cash was king. In the barter era, the first investments were simple exchanges of goods. A farmer might give a neighbor some seeds or livestock, not as a gift, but with the expectation of getting a bigger return later, on like a portion of the harvest or offspring from the livestock. That, my friends, was the original ROI, or return on investment. It was all about trading something you had now for more of something else later. Fast forward to around 2000 BC in ancient Mesopotamia. This is where things get a bit more formal. Merchants needed capital to fund their long-distance trade expeditions. So they started borrowing goods from others with a promise to pay them back, plus a little extra. This little extra was interest, and this system was the birth of lending and investing as a structured practice. We even have clay tablets from this era that act as the first ever investment contracts. Then came the Roman Empire, which really legalized and organized the whole process. The Romans introduced formal contracts, joint ventures where multiple people could pool resources, and standardized interest-based loans. They even had an early version of venture capital. Wealthy Romans would fund risky sea voyages for traders, and if the voyage was successful, they'd get a huge share of the profits. It was high risk, high reward, a concept we know all too well today. But the real game changer happened in 1602. The Dutch East India Company needed a massive amount of money to fund its global trade operations. Their solution was revolutionary. They sold small pieces of ownership in the company to the public. For the first time ever, anyone could own a piece of a major corporation. This single event created the concepts we rely on today. Stocks, which are those pieces of ownership. Shareholders, the people who own them. Dividends, a share of the profits paid to shareholders. And stock exchanges, the marketplaces, where these shares are bought and sold. The modern investing world was officially born. All right, so we've covered the history. Now, what tools do we actually use to invest today? Let's break them down. First up, the most famous one, stocks. When you buy a stock, you're buying a small piece of a company. If that company does well and its value grows, the value of your piece grows too. Plus, some companies pay out dividends, which is like getting a regular paycheck just for being an owner. It's direct ownership in the economy's biggest players. Next, we have bonds. Think of buying a bond as lending money to an organization. This could be a government, a big corporation, or even your local city. In return for your loan, they promise to pay you back the full amount after a set period, plus regular interest payments along the way. Bonds are generally considered safer than stocks because you get a fixed, predictable income stream. They're the slow and steady part of many investment portfolios. Then there's real estate. This is an asset you can literally touch. You can buy property, whether it's a house, an apartment building, or commercial space. There are a few ways to make money here. The property's value can appreciate over time. You can generate rental income by leasing it out to tenants. And there are often some nice tax advantages that come with owning property. It's a classic way to build long-term wealth. Feeling a bit overwhelmed? That's where mutual funds come in. A mutual fund is a giant pool of money collected from thousands of investors. A professional fund manager then takes all that money and invests it in a diversified mix of stocks, bonds, and other assets. They are perfect for beginners because your risk is automatically spread out across many different investments. You don't have to pick individual winners. A manager does it for you. Similar to mutual funds, we have ETFs, or exchange-traded funds. Like a mutual fund, an ETF holds a basket of assets. The key difference is that ETFs trade on a stock exchange, just like a regular stock, so their prices fluctuate throughout the day. They are also typically cheaper than mutual funds. ETFs are incredibly versatile. They can track a broad market index like the S&P 500, a specific industry like technology, physical commodities like gold, or even cryptocurrencies. Speaking of commodities, this is another classic investment tool. Here, you're investing in raw physical goods. We're talking about things like gold, silver, oil, and agricultural products like corn or coffee. Historically, commodities, especially precious metals like gold, have been used as a hedge against inflation. When the value of money goes down, the price of these physical goods often goes up. Now for the new kid on the block: crypto and blockchain assets. These are decentralized digital currencies and assets like Bitcoin and Ethereum. They operate on a technology called the blockchain, which provides incredible transparency and security. Investing in crypto is known for being high risk, but it also comes with the potential for very high rewards. It's a completely new asset class that's challenging the traditional financial system. Finally, we have alternative investments. This is a catch-all category for everything that doesn't fit neatly into the other buckets. We're talking about investing in fine art, rare collectibles like watches or wine, startups through private equity or venture capital, foreign currencies in the forex market, or even funding projects through crowdfunding platforms. These alternatives can provide great diversification because their performance isn't always tied to the stock market. So, where is all of this heading? The future of investing is being shaped by technology, and it's going to look very different. First, get ready for AI-driven investing. Artificial intelligence will analyze markets, predict trends, and manage our portfolios with a level of precision we can't even imagine. AI will create personalized investment strategies based on our individual financial habits, risk tolerance, and life goals. It might know you better than you know yourself. Next up is the democratization of investing through fractional shares. You no longer need thousands of dollars to buy a single share of a company like Amazon or Google. Fractional investing allows you to buy a small slice of a share for as little as $1. This single innovation is opening up the world of wealth building to millions, if not billions, of people who were previously locked out. Building on that, we have tokenized assets. Using blockchain technology, we'll be able to turn physical assets into digital tokens that can be easily traded. Imagine buying 1% of a skyscraper in New York or 0.5% of a famous painting. Real estate, art, and other illiquid assets will become as easy to buy and sell as stocks, creating massive new markets and opportunities for everyday investors. The future of investing will also be borderless. Technology is breaking down geographic barriers. A teenager in South Africa will be able to instantly invest in a promising startup in Japan with just a few taps on their phone. Global access to investment opportunities will become the norm, not the exception. Capital will flow to where it's needed most, regardless of location. Get ready for zero-fee and self-managing portfolios. Robo-advisors, powered by AI, will handle every aspect of your investment journey automatically. They'll do the buying, the selling, the rebalancing to keep your portfolio aligned with your goals and even optimize for taxes. All of this will be done at a fraction of the current cost, maybe even for free. Investing will become a set-it-and-forget-it service. We'll also see the rise of social investing. People will start following successful investors on social platforms the same way they follow lifestyle influencers today. Copy trading platforms, which allow you to automatically mimic the trades of professional investors, will become mainstream. Instead of getting financial advice, you will be able to directly link your portfolio to someone else's strategy. And finally, to prepare everyone for this new world, financial education will become hyper-realistic. AI-powered tools will create immersive financial simulations. Think of them as a flight simulator for your money. You'll be able to practice investing in realistic market conditions, make mistakes, and learn valuable lessons without risking a single dollar of your real money. It will make learning about wealth building engaging, effective, and accessible to all. So, let's recap. Investing started with simple bartering of goods, grew into complex global stock markets, and is now rocketing into a future driven by AI, blockchain, and total accessibility. From ancient Mesopotamia to the metaverse, the fundamental principle has always been the same: putting your resources to work to build a better future. So whether you're a complete beginner or a seasoned expert, one thing is crystal clear. The best time to understand investing is right now, because the future belongs to those who prepare for it. Thanks for watching. If you got value from this video, please hit that like button, subscribe for more content, and let me know in the comments which one of these investing tools you want to learn more about. See you next time.